2025 is bringing some big changes to the tax landscape today, so I'm going to break down what you need to know about this year's tax season and how to set yourself up for success moving forward. Thank you for tuning in. My name is Megan Robin, and I am a California tax attorney. Let's start with what's new this year. The IRS has made several updates that could impact your bottom line. There is an increased standard deduction for single filers. The deduction is now $15,000, and for married couples filing jointly, it's $30,000. This means more of your income is tax-free. Next, there are updated tax brackets. These have been adjusted for inflation, which has shifted income thresholds upwards, which might lower your overall tax liability depending on where your income falls. There are also some changes for small businesses. With the Section 179 deduction, you can now deduct up to $1.25 million in qualifying equipment purchases immediately instead of depreciating them over time. This includes things like vehicles, technology upgrades, or office furniture. There's also a retirement plan startup credit. If you are starting a new retirement plan for your employees, you can qualify for up to $5,000 in tax credits. Next, let's talk about compliance. The IRS is tightening its rules around deductions and reporting this year. Here are some things to watch out for. First, deductions for travel, meals, and business expenses now require more proof, meaning you need to keep accurate documentation, such as receipts, logs, and detailed records if you are claiming these expenses. Second, there are lower 1099-K thresholds, meaning that if you paid out or accepted more than $2,500 in payments from platforms like PayPal or Venmo, you must report this. This means even small online sales could trigger reporting requirements. If you're a small business owner in California, there are some important state-specific updates that you need to know for the 2025 tax season and beyond. Let's dive into what's happening here in California. If your business operates in San Francisco, Proposition M has brought significant changes to the city's business tax structure, including new exemptions and credits. Statewide, the California Competes Tax Credit Program is offering millions of dollars in incentives this year for businesses that are creating jobs or making significant investments in California. California continues to offer a workaround for the federal, state, and local tax deduction cap. This allows pass-through entities like S corporations and partnerships to deduct more state taxes on their federal returns. I commonly help my clients take advantage of this to save on their taxes. The statewide minimum wage has increased again and is now set at $16.50 per hour. This impacts payroll budgets and may require adjustments if you employ hourly workers. It's also a good time to review your compliance with California's labor laws, as stricter privacy and data handling requirements are also in effect this year. We're going to switch gears now and talk about some big picture planning for 2025. As you may have already heard, the Tax Cut and Jobs Act is set to expire at the end of this year. The Tax Cut and Jobs Act brought significant tax benefits for businesses and individuals, so this is a big deal. Congress is still debating whether to extend or modify the Tax Cut and Jobs Act, so there's a lot of uncertainty right now about what future tax years will look like. Here are some of the highlights of what would happen if the Tax Cut and Jobs Act expires. The 20% qualified business income QBI deduction would disappear. The QBI deduction allows many small business owners to deduct up to 20% of their qualified business income. Next, under the Act, businesses have been able to deduct a large percentage of the cost of qualifying property, like equipment or machinery, all at once. Starting next year, this bonus depreciation provision would phase out, meaning those deductions will have to be spread out over several years instead. The Act also lowered individual tax rates and nearly doubled the standard deduction. If the Act sunsets, individual tax rates will revert to pre-2017 levels, and the standard deduction will shrink, leading to higher taxes for many. The bottom line is that 2025 is a pivotal year for tax planning. By understanding what's at stake and taking action now, you can position yourself and your business for success regardless of what happens next. This is what I help my clients do. We're on a roll, so let's keep going with some tax planning strategies that apply every year. First, optimize your business entity. If your business is still a sole proprietorship but earns over about $50,000 annually, switching to an S corporation could save you thousands in self-employment taxes. Second, make strategic contributions to your retirement accounts based on your tax bracket, income, and retirement goals. And third, leverage Section 179 deductions. If you're planning major purchases this year, like upgrading equipment or vehicles, prioritize them before year end to maximize your tax savings. By thinking strategically throughout the year, you can reduce your tax burden and reinvest those savings back into your business. Last but not least, let's talk about deadlines. Missing these can lead to penalties and interest charges, so mark your calendars. Quarterly estimated taxes are due April 15th, June 15th, September 15th, and January 15th. Annual filing deadlines are March 17th for S corporations and partnerships and April 15th for sole proprietors and C corporations. So there you have it. the key updates and strategies that California's small business owners need to know for the 2025 tax season and beyond. I can't emphasize enough that every step you take now will pay off later. Even a modest change that saves you $5,000 a year in taxes results in $50,000 of savings after only 10 years. The numbers add up quickly. In my practice, I work with my clients to create financial plans that align with their goals and make sense from a tax perspective. With all of the changes and uncertainties surrounding taxes lately, it is more important than ever to have a well thought out tax strategy. To learn more about financial and tax strategy, subscribe to my channel and I'll see you next time.